Hello fellow stackers, 365 here, welcome back to my channel. So in today's video I want to share an article that I found. I'll leave the link to this article in the description if you'd like to have a read through the whole article. I'm only going to touch on some key points that I find very interesting. Now I will put a link on the screen, but this is the article that I am reading from. It's from Seeking Alpha and it says SLV, which is the stock abbreviation for silver. Silver offers protection against BRICS, currency union and CBDC efforts. Now this is a really interesting read because Seeking Alpha is mainly based around stocks and picking stocks and advice on stocks and things like that. So it's very interesting to read as we go through it, although this is kind of almost talking about the iShares Silver Trust ETF, which is an exchange traded fund that mimics the spot price of silver, and that ticker symbol is SLV. As you go to read on, it actually almost contradicts itself by saying that it's better to own the physical metal. Now, for those of you that have looked into owning ETFs, and like I said, ETF stands for Exchange Traded Fund, and they are a fund which you can buy on the stock market, and they basically mimic the spot price of a commodity. So you can get them in oil, you can get them in gold, in silver, whatever the commodity is, it mimics the price of it. Now you don't physically own any metals when you're investing in these funds. Now a lot of these funds say that there is a way of converting your stock into physical metal if you hold a certain amount and all the rest of it, but in my opinion that's simply not the case, because if you look at the paper ratio to the physical precious metal ratio, it is crazy. That there is so much more paper silver out there than the actual physical silver is. So although some of these funds may say that you can exchange your paper fund for physical, if everyone went to do that, very similar to what we just found out with all the banks, and that many of you would have known for a long time already, that although they say they have the amount backing it, when you actually go to get it, it's not that simple. So let's read through this article, and I'm going to highlight some key bits that I found very interesting. Now it says the recent decline in the US real interest rates and the Federal Reserve balance sheet increase provide a strong immediate bullish catalyst for silver. Silver strengthens against the Japanese yen, and the US Europe's related issue implies a dovish central bank shift may greatly benefit silver. Emerging market countries are aware of growing fiat currency instability in the US and Europe and are accelerating plans to create alternative currency union or non-dollar trade deals. The US and European Union central banks appear aware of instability concerns, creating new CBDC plans, which will likely increase oversight of private transactions. Investors can hedge against these accelerating risks with the world's oldest decentralized currency, silver. Now it goes on to say how silver has performed very well over the last year, and it also expands saying how a lot more people are flooding to silver to secure their funds essentially. So like I said, I will leave this whole article for you to have a read through, but it basically says fundamentally silver and gold benefit from high inflation compared to interest rates. If inflation is high but interest rates are higher, then precious metals are inferior to banks' deposits or short-term bonds due to the higher real yields. Of course, that excludes the possibility of liquidity and security issues in fiat currency cash. If banks' deposits continue to decline at the expense of bank liquidity, precious metals may rise due to the counterpart risk in depositing fiat currencies. However, the FDIC expansion mitigates this pressure for now. Further, while I like paper ETFs like SLV, for most instances it's not necessarily secure in a widespread banking crisis due to their lack of physical coverage. And then if we click into this link, this explains gold and silver ETFs, and I will leave this link in the description also if you'd like to have a read through. But the bit I want to draw your attention to is the counterparty risk. Now it says because GLD, now GLD is the fund that tracks gold, is a paper asset that is backed up by gold, it does involve some degree of counterparty risk. These risks could entail such issues as accounting problems or liquidity issues. And like I said, the liquidity issues are, although they're saying that the ETF is backed by physical metal, on paper, the ratio to physical metals is so high that the liquidity issue would be if everybody wanted to convert their ETF into precious metals at the same time, that there just physically wouldn't be enough to be able to do it. Similar to where if everyone went to the bank to do a bank run at the same time, they physically can't give everyone their cash. It's the same thing, exactly the same thing. Although they're saying that some of these ETFs are backed by physical currencies, the liquidity is just not there to be able to completely back it for everyone. And then it goes on to say the same potential for counterparty risks exists with SLV, which is the silver ETF. Owning shares of gold-based ETFs like GLD is the same as owning physical bullion that you can touch and feel. The difference surrounding the delivery process of GLD bullion is obviously an issue worth considering. In a potential time of economic or geopolitical crisis, which in my opinion we're going through now, one may not be able to exchange shares of GLD as they would physically bullion. Although this fund is designed to try and closely mimic the price of gold, there are also fees associated with investing in such vehicle. That being said, owning physical bullion also has fees. One can compare the fees, however, and also weighs whether or not taking actual custody of gold is important to them. It is important for one to understand, however, that owning physical gold is not the same as owning shares or a paper gold product. The same considerations could be taken into account regarding physical silver investments such as SLV. Now it goes on to say the pros and the cons. Ownership in GLD/SLV does not equate to owning physical gold or physical silver. GLD and SLV have certain potential counterparty risks. Taking delivery of physical gold or silver bullion is out of reach for most investors. Potential for liquidity issues. In an economic or geopolitical crisis, shares may not be exchangeable for physical metals. So, like I said, have a read through this. I will leave this link in the description below. But I think the main takeaway from this video is if you like the idea of having exposure to precious metals, you'd like part of your portfolio to be in precious metals, then in my opinion, physical is the way forward. Now, I've said it before, I'm not a financial advisor, so always make your own decisions when doing any investment. In my personal opinion, you've just seen it there. This is actually a stock website that promotes stocks and talks about stocks. They are literally themselves saying that there would be liquidity issues in a financial crisis. And in my opinion, we're currently going through a financial crisis. There's a number of banks closed down in the US. A lot of you have watched my video where I went to the UK banks and I was trying to draw out my cash, and they're basically simply saying that I can't get hold of my cash. I need to pre-order it. I need to wait for a few days. So in my personal opinion, if you want exposure to precious metals, if you want to protect yourself from inflation and the CBDCs and the BRICS issues and all these things that we've touched upon in my videos, this is the way to go. You want to physically be able to hold your asset. You don't want to get to a stage where you have a lot of money tied up in these exchange traded funds and then you decide that you want to take physical ownership and it's just simply not there. And again, even the actual fund says itself, you have to hold a certain amount. I think it's 100,000 worth of that particular share to be able to even have the option to convert it into the physical form. And this is just two funds that we're looking at here. These are the iShares funds. Now, a number of funds don't even say that they're backed by the precious metal because they're physically not. So a number of these ETFs that you're investing in aren't even backed by the physical metal. They're literally just mimicking the spot price, the movement. So you need to be very, very careful when choosing whether to invest in physical or into paper form of precious metals. Now, like I've said, my personal opinion is if you can't hold it, you don't own it. No one can take this away from me. This is my own bank. This is my precious metal. This is my silver. So let me know what you think about that in the comment section below. I just find it very interesting how many people are talking about investing in this stuff to protect themselves from the BRICS movement and CBDCs. And like I said, even the shares websites are in a roundabout way suggesting that it is risky in terms of political crisis to own an ETF over the physical asset. So like I said, let me know what you think about that in the comment section below. I hope you found this video interesting. Every time I find these articles, I like to share them, and I always leave a link to them in the description below, so you can just read through them, because I am biased to owning physical. This is my choice of way of owning precious metals. Now, I'm not anti-stocks, I'm not anti-crypto, I'm not anti any other investment. This channel is based around precious metals, and that is why sometimes it might come across a little bit biased when we're talking about precious metals. But just know that I do own stocks, I do own crypto, I do own other investments. So it's not that I'm anti-stocks. I do own a number of stocks. I do think stocks is a very, very important part of your portfolio. I just think that when it comes to investing in precious metals, if you choose to allocate some of your portfolio towards precious metals, then in my opinion, my personal opinion, you need to own the precious metals. That's the whole point of having exposure to precious metals, is that you can physically touch it, you can physically feel it. It's a hard asset. It's in the same category as property. If you own a house or a rental property, you can walk up and you can touch the house. You own that house. The same as precious metals. You can pick up this stuff, you physically own it, it's in your hand. So in my opinion, whenever I want exposure to precious metals, I would never look to buy an ETF or anything like that, simply because I know how high the paper ratio to physical ratio is, and you don't physically own the stuff unless you have it in your possession. So let me know what you think about that. As always, thanks very much for watching. I want to say thank you very much again to all the new subscribers. We've just passed 5,000 subscribers, so I will be releasing the giveaway soon. The poll at the moment is heavily weighted towards giving out 5 1-ounce coins to 5 separate winners. Do have your say on that in the community tab. You can vote whether you want someone to win 5 ounces, one person, or whether you want 5 individual winners to win 1 ounce. And like I said, the video will be coming very, very soon, so keep a lookout for that. And as always, thanks very much for watching, and I hope you have a nice day.